Investing with limited funds can seem daunting, but it is not only possible. It can also be a strategic way to build wealth over time. The key is to start small, be informed, and remain disciplined. The journey of investing is as much about mindset as it is about money. So, let's explore various approaches and strategies that can help you make the most of your financial situation. First and foremost, it's essential to understand the concept of investing itself. Investing is essentially putting your money to work with the expectation of generating a profit or return. This can be through various avenues, such as stocks, bonds, real estate, or mutual funds. However, investing is not just for those with deep pockets. It is accessible to anyone willing to learn and take the initiative. Before diving into specific investment options, it's crucial to establish a solid financial foundation. This means having a budget in place, understanding your income and expenses, and ensuring that you have an emergency fund. An emergency fund typically covers 3 to 6 months' worth of living expenses, providing a safety net in case of unforeseen circumstances. By ensuring you have this cushion, you can invest with peace of mind, knowing that you won't need to dip into your investments in case of an emergency. Once you have your financial house in order, you can start thinking about how to invest your limited funds. One of the most effective ways to begin is through a retirement account, such as a 401k or an individual retirement account, IRA. Many employers offer 401k plans, often with matching contributions, which is essentially free money. If your employer offers this benefit, it's wise to contribute at least enough to get the full match. With IRAs, you can open a traditional or Roth IRA, both of which offer tax advantages that can help your money grow over time. Even if you can only contribute a small amount each month, the power of compound interest means that your money can grow significantly over the years. Another avenue worth exploring is low-cost index funds, or exchange-traded funds, ETFs. These funds are designed to track the performance of a specific index, such as the S&P 500. They offer diversification, which means your investment is spread across a wide array of stocks, reducing the risk associated with investing in individual companies. The beauty of index funds is that they typically have lower fees compared to actively managed funds, making them a cost-effective option for new investors. Many brokerages allow you to invest in these funds with minimal initial investments, sometimes as low as $100. This accessibility means you can start investing even with limited funds. If you're interested in the stock market but concerned about the risks, consider dollar-cost averaging. This strategy involves investing a fixed amount of money at regular intervals, regardless of the stock price. By doing this, you buy more shares when prices are low and fewer shares when prices are high. Over time, this can help reduce the impact of volatility and lower the average cost of your investments. For instance, if you decide to invest $50 each month in an index fund, you'll gradually build your investment without trying to time the market, which can be particularly challenging for novice investors. If you're looking to invest in individual stocks, it's essential to conduct thorough research before making any decisions. Start by focusing on companies you know and understand. Look for businesses with strong fundamentals, such as consistent earnings growth, a solid balance sheet, and a competitive advantage in their industry. While investing in individual stocks can be riskier, it can also offer higher returns if done wisely. However, it's advisable to limit the amount you invest in individual stocks to avoid putting too much of your portfolio at risk. Real estate is another investment avenue that might seem out of reach for those with limited funds, but there are several creative ways to get involved. Real estate investment trusts, REITs, allow individuals to invest in real estate without having to buy property directly. REITs are companies that own, operate, or finance income-producing real estate. They often pay dividends, making them an attractive option for investors looking for income. Many REITs have low minimum investment requirements, allowing you to gain exposure to the real estate market without the need for significant capital. Peer-to-peer lending is another innovative investment option that has gained popularity in recent years. Platforms like Lending Club or Prosper allow you to lend money directly to individuals or small businesses in exchange for interest payments. While this can yield higher returns than traditional savings accounts, it's essential to be aware of the risks involved, including the potential for borrower defaults. Diversifying your loans across multiple borrowers can help mitigate this risk. For those who are tech-savvy, consider investing in micro-investing apps like Acorns or Stash. These platforms allow you to invest spare change from everyday purchases. For example, if you buy a coffee for $3.50, the app rounds up the purchase to $400 and invests the difference. This approach makes investing feel less intimidating and allows you to build a portfolio over time without feeling the pinch of a large investment. These apps often provide educational resources to help you learn about investing as you go. Education is a crucial component of investing, especially when you're starting with limited funds. Take advantage of free resources available online, such as podcasts, blogs, and courses. Many financial institutions and investment platforms offer educational materials that can help you understand the basics of investing, the different types of assets, and how to create a diversified portfolio. Consider joining investment clubs or online forums where you can share experiences and learn from others. Engaging with a community of like-minded individuals can provide valuable insights and keep you motivated on your investment journey. It's also important to maintain a long-term perspective when investing. The stock market can be volatile, and it's easy to get caught up in short-term fluctuations. However, history has shown that the market tends to rise over the long term. By staying disciplined and sticking to your investment plan, you can weather the storms and take advantage of the opportunities that arise during market downturns. Avoid the temptation to panic sell during market dips. Instead, view these moments as potential buying opportunities. Finally, remember that investing is a journey, not a sprint. Start where you are with what you have, and focus on building good habits. Celebrate small victories, whether it's reaching a savings goal or making your first investment. Over time, as your financial situation improves, you can increase your contributions and explore new investment opportunities. The key is to stay committed to your financial goals and keep learning along the way. In conclusion, investing with limited funds is not only feasible, but can also be a rewarding endeavor. By establishing a solid financial foundation, exploring different investment options, and maintaining a long-term perspective, you can build wealth over time. The world of investing is vast, and there are numerous paths to success. With determination, discipline, and a willingness to learn, you can navigate this journey and create a brighter financial future for yourself.